So thank you everyone for joining our LinkedIn Live. Today we are going to be exploring the topic of tenant risks in this uncertain economic environment. My name is Jerry Frank. I'm the co-founder and CEO of Stratafolio, and we're a cloud-based software solution that's focused on that small to mid-market commercial real estate owner. And we're designed to help owners save both time and money while managing their portfolio. So we are always looking for opportunities to educate our customer base and save our customers money or make them more money. So through our involvement with the National Association of Realtors REACH Scale-Up program, we had the opportunity to meet some great individuals, including Marissa and the team at Otso. So Marissa is the co-founder of Otso. It's the commercial real estate industry's first end-to-end tenant due diligence solution. And Otso has partnered with ownership groups as large as REITs like Nuveen and Shopcore to smaller portfolio companies like Steele, Bishop Real Estate, and Beck REIT. And they've become the fintech nerds that make tenant underwriting faster, more accurate, and affordable, and provides their customers with peace of mind in all of their tenant decisions. Otso's end-to-end due diligence solution offers a collection of tenant financials. They get in 24 hours or less, you get an underwriting turnaround. There's help with risk mitigation with multi-year bond for lease security. And Marissa was with us last year to talk specifically about their multi-year bond. And we brought her back today so she can share her insights on what owners can be doing now to prevent and prepare for tenant defaults amidst our current economic environment. Welcome, Marissa.
Thanks, Jerry.
So the format today is going to be like it always is, 20 minutes of conversation followed by 10 minutes of Q&A from the audience. So why don't we get started? When we first spoke last year, your tenant was only focused on that multi-year, correct?
Correct. Yeah. At that point, we hadn't addressed the underwriting because that was kind of part of our secret sauce, like back end approval process for our bond.
Okay. And now it looks like you've made some different changes. And so why are you sharing that now with the world?
Yeah. So, like I said, our secret sauce was the underwriting. And what we realized was this component was just as important, if not more in some cases, than the actual product of the bond. And the reason being is what we've discovered is lease security is usually brought up like in the middle of negotiations, right? They're already trading paper. And a question we would always get from our customers who would say, hey, we want to use you guys, like have the tenant apply. Usually they have to tell us what they're going to apply for. Mm-hmm. And one question we always got was, well, how much should I tell them to apply for? Which told us that there was some uncertainty about how much they should be asking or how much they could get from the tenant. Mm-hmm. And so what we knew in the back end with our decisioning is that we could figure that out for them. And so we started talking to our customers who actually were like, it would be even more valuable for you not to come in as, obviously an option for us in lease security, but if you could give us like the heads up, when we're starting to trade paper, when we're talking the LOI, to underwrite the tenants for us and give us these insights on how much should we be collecting in lease security, and giving us insights over, on the tenant risk itself. And so that's where about 6 months ago, we started working with companies like Nuveen, like big institutionals, down to smaller ownership groups like the Beck REITs of the world, to develop, and productize our decisioning in the back end to provide a solution, an economical gut check kind of solution for owners as they're underwriting up front.
All right. And as someone who talks to owners and lenders every day, what are you seeing out in the market right now from your perspective?
So I talk to them every single day, and it really varies by market. But I think from a big picture macro level, especially owners that have diversified portfolios across the country, and lenders who are, it's not a secret that there's tightening of belts with the, interest rates and whatnot going on. there's a lot of concern about what's going to happen, specifically, obviously, more for retail and office we're seeing. But when you're looking around and you're starting to see funds like the BlackRocks of the world raising, millions of dollars as a standby to snatch properties at a discount when the fall inevitably happens, then you kind of know stuff's about to happen. And just the overall like lead generation, people reaching out to us just in general about helping them out with their underwriting. We're seeing that more and more every week. Those volumes are going up. But I think even for those owners, that are in markets where they're not having issues with the occupancy and there's a lot of demand for their space in those markets, I think that there is still value and some concern with the projection of the success of those tenants in those, because there's nothing worse than experiencing a default, whether you have a 50% occupied building or 100% occupied building. That hurts either way.
Right. Yeah. So you've mentioned that tenant underwriting is more important now than ever before. Let's talk a little bit more about that.
Yeah, I think, and I say that because of two things: the current environment, and yeah, there's those people that have been like, I've been, through ups and downs, and we've survived it, and that there's that mindset. But I think what is missing in a lot of people's mindsets is like really how they look at defaults or how that's calculated, and kind of thought about from a prevention standpoint. And so what I'll do here is I'll share my screen with, this is actually something we walked through one of our customers with to kind of model out like what one deal could do to the value of their asset. And so this was specifically, we took the deal costs of this specific deal. And by that, we're looking at the TI contribution, the commissions, the rent abatement, and whatnot. So that came out to $243,000. And then the annual rent, we took that. So when you take the annual rent and the deal costs, we wanted to calculate, we always work with them, what is the break even where you've paid off all those upfront costs and you're actually putting money in your pocket. Right. And the break even point for this specific, deal that we were looking at with them was about 1.95 years. So say 2 years. Okay. And so we modeled out, if there's a default at month 13, then you've lost about 118 grand. That's no bueno, right? But if there's a default at month 24, even, you break even, but you're still only, putting in your pocket about $6,000. So that's not a lot, right? And that's not like why we're in this business. And so in looking at the total square footage of the property, we kind of looked at that. We were doing an overall tenant assessment for this particular customer. And we said, if you lost that one tenant, losing that one tenant and taking into account how much of that property that tenant accounted for, which was 17% of this retail center specifically, in losing that tenant, you're reducing your asset value by over $1.5 million. And we're trying to get our customers to start looking at when they're looking at prospective tenants in this way, is to get occupancy and to fill those spaces is one thing, and that's a win. But that's looking at it from a very specific standpoint. Even asset managers that we work with, right? Like that is like what a lot of them are compensated on. But it's one thing to, on like March 1st, have 100% occupancy. And then another thing next quarter to have a few of those default. And so that's, some of the oversights we're seeing from a standpoint of approach and not acknowledging, and I'll stop sharing here to talk through, some of the other shortfalls. And by no means is this a criticism of people doing things wrong. Right. I think this is the oversights that we're seeing, and mind you, I'm seeing this from small ownership groups all the way to the REITs, who you would assume, and some have these teams, but there is an oversight on how they view credit. Mind you, and if you would have heard our last discussion, you would have known that we came to the industry as owners ourselves, right? And as owners ourselves, my co-founders and I actually didn't really look or think entity credit was that important, especially for small mom and pops. But what we've discovered in diving into the underwriting world and understanding how to look at a business's financial health, believe it or not, even if there isn't too much history, credit can tell you a lot of things. And it's a great gut check to pull, are there any liens? That's one of the big things. That are existing? Are there any bankruptcies? Are there any, like, how are they paying their bills? And that's what people don't understand, is like credit tells you that they have scores on how behind they are in payments over time, how behind are they payments in a certain time period. So that's really valuable information. And so credit, I think there's an oversight on the value of entity credit scores. Another thing that we see is a short sight on looking at cash management. And so a lot of these owners will say, give me 1 to 3 to 4 maybe months of your bank statement. I just need you to prove that you have that much amount of money in a bank account.
Right.
And that's okay. But what we found is, and in doing this 4 years now, you'll see, I see a lot of companies with flush with cash in January, right? And then you go to the next quarter and there's barely anything happening, right? There's barely anything in there. And a lot of this is strategy with taxes and whatnot. And that's another kind of shortcoming of just looking at tax returns, which we see quite often. And so what we realize is, like, and with our underwriting, is we can't just look at that one-time snapshot. It is important to have like a continuous view of how they're managing their cash in and out of that bank account. And, we have the capability to do that.
Yeah, and you touched on something that I think is really important. You said these owners, they've been doing what they knew how to do before, because in many respects, the tools and systems just weren't out there for them to use unless they had a very large team. So what you're doing is you're offering owners of all sizes the opportunity to really dig in, and before you sign any kind of paperwork, really do the true due diligence on the tenants that are occupying that space.
Yeah, and it's not even just that. It really comes down to resources and time, right? And some of our customer that are asset managers in some of these big organizations, like they literally like, y'all are taking a task off my plate. And by no means are they just like rushing through decisions. And there are ways for them to look up these things, but it really comes down to the time and resources. Like I've talked to some people in organizations that you would assume would have access to this information, saying they're still Googling and looking at LinkedIn, which I mean can help, but that's not like the best use of time, and that's not going to give you true accurate information. And so again, it's really just when you're in a deal, and even as a broker, you don't want to slow down the deal at all, right? And so you don't want to cause an awkwardness. There is a lot of awkwardness, and that's another kind of like oversight and way that we're helping people is, the collecting of information is a pain in the butt. And what we've actually found across the board, there is no standardization of what people are collecting. They're just kind of like taking what they can take, which isn't the best way. That's again, how oversight happens.
Right.
But there's a lot of time of, hey, I need this, go back and forth with the tenant on that. And so we're able to actually take that part out for a lot of our customers who, use us in that way, is just like the collection point, but also when the tenant is actually not showing strong financial strength, we're also kind of like good cop, bad cop, in that like, they're like, oh, they're like the expert underwriters, that's our third party, we trust them. Sorry, we can't do the deal because they said that they aren't seeing this. We're also kind of an out in that way with them as well.
So Let's talk more about how you help with underwriting, with tenant underwriting.
So what we do is, again, the value of looking at the credit and taking those factors, looking at the bank account. So we're able to pull, and this isn't for every tenant because there are some tenants that aren't as appropriate for this, but we're talking the majority of small businesses, right? Mid to small sized businesses, which is where our bread and butter is. And we are able to pull 730 days, so 2 years of cash management in and out of their bank account.
Wow.
And we get barely any friction with them because it's through a company called Plaid, which if you use Venmo, if you use any of these fintech products and you're connecting to your bank account, that's Plaid. And so we have a partnership with Plaid that gains, the trust of these folks that are applying through our application, and they still feel secure about it.
Yeah.
And so we're able to have that continuous view. But what we essentially do is we take the financial statements, we take the credit, we take the cash to rent ratios, like how much is cash are they carrying, and we put that into a score.
Okay.
And with that score, we are able to tie that to our recommendations on lease security, for example. And so with lease security, we're able to then be like, we would collect a minimum of this, a maximum of that. This is how much you could probably collect with how much they're showing, right? And then, oh, by the way, here's an option with our multi-year bond. You can collect more, with us, and they're pre-approved, right? And so that's a way that our customers that started with a bond are loving us even more because we're giving them that insight up front. They're no longer asking us like, how much should I apply for? And so it's really that gut check that people are saying we're taking a task off their hands. We're giving them more knowledge up front, and insights to negotiate more efficiently and faster.
Nice, very nice. Do you want to show us what that product looks like?
Yeah. So what I'll do is let me share with you our report, and what I can do is walk you through the process as well.
Yeah.
And so let me share screen again here.
I think Excel is a wonderful thing.
It is. Okay, can you see my screen again?
Yeah, sure can.
Okay, so this is an example, a sample report of what we would be, what our customers get. By the way, like we turn this around in 1 day or less as soon as we have everything. And so we kind of give you like, okay, the satisfactory, and then we show, we analyze, we take at least 2 years, but we like to get like 3 to 4 years of financial statements, depending on, how much history they have to show, profit margins, how much liquidation do they have available in the case something goes wrong. And so we look at all those factors. We look at their credit. We look at their financial stability, which is part of their credit evaluation, and this is specific to how well do they pay their bills. We look at cash to rent ratio, how much cash do they have on hand again in the bank. And then we kind of give this financial summary, and then we show our work, right? And so like how the points are based on their ratings, and we come up with an overall score. And so this one landed in, kind of that last bar in good. And then because it landed in good, we're able to tailor that to our lease security recommendations here. And so showing our work again, because they were good, we'd say, and this is actually market dependent, right? So like these recommendations change by market, by asset class, depending on asset class as well. So I think this was like an office in like Boston, or what this could have been an example of one of those. But so because of that, we take the deal analysis, and we take all the deal economics. And so for this particular one, total deal cost came out to $290K. We're able to show you, okay, showing our work again, minimum, we'd collect this, maximum, we would collect 116. Oh, by the way, we have an estimated approval for you for 154 if they use our bond. And then we show them like, if you were to collect this much, where would your break even happen with your deal costs? And then how much of those deal costs are covered with each of these amounts. And then after this, we just show, okay, like kind of just little data points. Are they behind on their payments? If so, how many days? Are they, what's the corporate linkage of this asset? Are they the parent? But that's actually surprisingly comes up a lot especially with franchises that we've looked at. And then just like overall, we'll have some comments for our customers on red flags, on, financial statements, on recommendations for, in this case, FDA. This is a biotech company, so it's like we recommend deeper dives and have those available. Like we partner with a group that has like specific algorithm to looking at biotech companies, for example. And so those kind of deeper dives are available through us as well as like any personal credit review, background checks, all of that, which again, we were really surprised to see how those aren't happening as much as they should be. We feel like criminal background checks should be like every deal, especially small businesses. And so we're able to do that as well. As far as how all of this like comes together and happens, I'll give you an example. So our customers have an account on our platform. They simply just go in and start a report. And then, so say in this case, like they're going to send this to the tenant. We're going to have this to the tenant. And so they choose our automatic collection. They just enter the tenant's information. They enter the deal economics, like square footage, term, commission. That's how we come up and calculate all the deal costs on our end.
Right.
And then after that, they just kind of they confirm. They have to select. That's just kind of it. So they just confirm the information here. They can make updates if they need to. And then they're like, we're ready to send to the tenant. So we give them the option though. If they don't feel, a lot of our customers, when they first start working for us, haven't done this before. And they're just like, I don't know. There's a lot of sensitivity, obviously, around sending a third party to a potential tenant. Right. And so what we actually have them do is collect themselves and then upload the information themselves to start. And a lot of them will start that way, but then they're like, oh, wow, this is actually really cool. We're going to have you, do this, the tenant collection too. But so in this case, the tenant is sent something. And then from the tenant's perspective, if they choose to go this route, what they'll do is they'll get an email. And this is like, oh, by the way, we're a secure platform. This is how we keep your data safe. So they know, this is a legit secure organization and application process. We kind of show them that there's 3 things they have to do for us. Is number 1, they have to confirm their entity. So just confirm and enter their entity. And then this is where they would connect to their bank account. And so they connect to their bank account. Again, in some cases, they can't connect to their bank account and don't. They can just upload statements. And so we ask for a minimum of 6 months. It varies by customer. For our bond applications, we ask for a year of statements. So they would rather connect to their bank account than upload a year of statements, right? And then from there, they can skip that step if they want, but then they just upload their financial statements for us, their P&Ls, their balance sheets. There's a requirement. We have a requirement for our bond anyway of how much. And then customer to customer, they have kind of different requirements, but we work with our customers, and you'd be surprised that they don't have established standards for new companies, other companies, if they're just doing a personal guarantee. And so we help them set those standards and can customize these, requirements for them. And then that's it. That's it. And then like the next day, they receive that report that you saw.
So the owner receives that report.
The owner receives that report, correct?
Does the tenant receive that same report?
I'm sorry?
Does the tenant receive that same report?
They don't, unless they do a pre-approval with us. If they're coming to us for a bond pre-approval, they'll receive the report. Or if some of our tenant reps, we have some tenant reps actually that have come to us, asking to use our underwriting, because it gives them that ammo when they're, going to the landlord, like, hey, we've actually already done this for you. Here you go. Here's a whole packet. And oh, by the way, they're approved for this much for lease security. So that's, in those cases is when the tenant will have the report.
So if you were buying, you're looking at a new building, obviously this is an interesting time where people are jumping on opportunities. So they see a strip mall, for instance, that's coming, that is now for sale. Owner wants to go buy it. They would use this process to help evaluate the current tenants and potentially change the offer price, correct?
They can. And so that's kind of like some initial discussions, like the customer conversation I had earlier, where they're using us to audit their portfolios by looking at their rent rolls and pulling tenant credit and making, recommendations around that. And so we're used in that way, or we're also used for people acquiring assets. And then we're actually having a lot of discussions with lenders we're doing pilots with to help kind of create this report. So if there's anyone out there that's interested, that's acquiring assets, we have some active pilots happening, and we'd love to get your feedback. That's how we built our tenant report, right, is working with our customers to build it. And what I could do is I could show you an example of how we're helping some of these and the report we're working on in this pilot. So in looking at the overall tenant rent roll, for example, we're able to assess what we're calling, right, for now, the true value, the true cap of the asset. And so in this case, this was an office building, for example. This is one of the first ones. We deemed their contract price is 13 million, and we actually deemed it to be 12.5 because of the tenant stuff. And so, if you look at it, we have our NOI and they give us the contract price. And then there's, a little bit of a difference here. And so we obviously explain the difference. But then we go in and, these are all the components we're taking on top of just the tenant credit that we're evaluating on the rent roll. Is we're looking at the term, we're looking at the obviously credit scoring overall, we're looking at the occupancy, the age, is there an anchor, for retail centers in that case, or like just any tenant that's occupying most of the space in office or industrial, right? Are there rent escalations present? And so we have all of these points, again, showing our work of how we, come to our rating. And then on the scoring, we get the rent roll, and then we're able to look at, okay, here's what their credit rating is. Here's the net rent. Our true rent is like any adjustment if we see any issues, right? And so that's where we get the adjustments to kind of like show our work to how we came up with that value and the cap rate. But we find customers have asked for this, and because we're kind of doing this on an individual basis, and we realize that this could be a really, really valuable product, especially in the current environment, where there isn't really like a true car in commercial real estate, and the value of assets, it's occupancy, and it's like the projection of the performance of that income. If you're buying an income stream, how well is it going to perform? There's not a lot in the status quo of buying an asset to really, other than estoppels. And as you mentioned, you had a customer say that they'd been lied to completely about the rent roll, which unfortunately happens. And so we're able to provide kind of, again, a gut check, some sort of validation and like a measurement of, are you paying too much? Are you paying too little? And is there anything that we need to look into? So in this case, since the contract price was over what we deemed as the value, the owner looks at this and, they're still going to buy the asset, but then they're like, I'm going to look at those two tenants and I'm going to prepare either up the security or do something. They have an insight to, this could be an issue for me down the road. So I'm going to prepare for it. Versus a lot of owners, and every owner has experienced buying an asset and having an immediate default come out of nowhere.
Right.
So again, just helping owners with more information to be able to mitigate risk and optimize the value of their assets.
And again, what sort of profile are you looking for in those pilots?
We're doing some pilots with lenders, but it's anyone that's acquiring assets. We prefer multi-tenant assets, right? That's where we provide the most value. We look at single tenant, but that's more isolated to our other reports. And so any multi-tenant assets, anyone that's acquiring them, we're happy to talk and participate in our pilot.
Okay, great. I think we have a couple of customers that I can think of that might really benefit from this. Well, we'll make some introductions afterwards.
Awesome. Yeah.
So I know we're getting to the end. Tell us about your new underwriting membership. Who uses that?
Yeah. So we realized, and really quick, I could compare us to, and this is not to knock, there are the third party, pure like underwriters, that's all they've been doing. And they do great work. In fact, one of our partners does that, and they do a great job. But what they find is like they're usually thousands of dollars, to do an evaluation. You're going to get like a very deep report of like that you have to sift through.
Right.
And it's great information, but it's not necessarily needed for every tenant. And so what we wanted to provide was access to everybody. Again, that's why we've been working with small and large owners alike to provide them with access to all the information, like essentially the report I sent you, at an economical price with a really quick turnaround, because third parties will typically take also anywhere between a week to days to a couple of weeks. We understand, we want to be like, take the baton and keep running with our customers, is what we like to say. And so that's really our differentiator, is more of like that economical, quick turnaround, with insights, to empower you when you go into negotiations, not to kind of rebut on the negotiations you're already in. And so our membership, it's $270 a month. It's an annual subscription that gets you 12 tenants. It not only gives you 12 tenants, but we also give you access to our quick credit insights. So if you don't necessarily if you want to do kind of a gut check before you're actually giving an LOI to a tenant, just to make sure you're not wasting your time, we have you can go on our site and quickly get like a overall credit report on, are there any derogatories, is there anything I should, so that's included in the membership. We scale up and down depending on demand and how many tenants they're looking at. We have enterprise kind of packages, but our basic package is $270 a month. And because you're friends and family, and anyone that's on this or listening to this, we'll offer a promotion to your folks for $250 a month, and with an even steeper discount if they sign up with an annual payment.
All right, excellent. Well, I'm going to share my screen since we're getting to the end of the hour and actually went over a little bit. But I do want people to be able to get in touch with you. And so there is Marissa's contact information here on the screen. And let's see. Can everybody see that?
Yeah, or you could find me on LinkedIn as well. I'm really active on there if that's easier. But yeah, please do reach out, whether you want to participate in our pilot or whether you're curious to learn more about how we can kind of become that. Literally one of our customers said we were their like fintech nerds that they rely on, as far as like they're doing all their tenant underwriting for them. So we're happy to help in any way.
Excellent. I think I would wear that term with a badge of honor.
Yeah, I know. We have no issues. We're proud of being nerds because we love what we do, essentially. So.
All right, so you can find your Marissa's contact information here on the screen, and again through LinkedIn. And for everyone else, if you want to join us on April 26th, we have an exciting webinar coming up with Intuit Senior Product Specialist Matt Bright, and we're talking about using QuickBooks Online and using Stratafolio together, and what you can do to manage your commercial real estate portfolio. So until next time, take care. Thank you so much, Marissa.
Thanks, Jerry. Take care.
Bye.